What's up, everybody? It's the Common Sense Investor coming at you with another video. And in this video, it took about a day to track down the source of all the misinformation concerning the new AMC filing that they filed December 6th about the 50 million share forward agreement that they've entered into with Goldman. I've never seen so many people get the exact same points wrong, and that only points to one thing, that they got their talking points from somebody or somewhere. And finally, down in the comments of the videos, I seen somebody say that, in Boss Blunt's defense, that he watched this video and this is where Boss Blunt got his information, so this is the source of all the misinformation. Now, in your defense, stock retail, this was a very well prepared presentation, very professionally done, but you need to understand something. Your 2 college master's degree in business, you got it wrong, okay? So let's get down to it. Where did you get it wrong? Well, let's talk about where you got it right. First off, you said AMC will agree to sell the shares of common stock in each forward, all right? The forwarding party, in this case it would be like Goldman, will have a pledge of up to the max shares deliverable, an agreement to buy 50 million shares, with the right to rehypothecate, short sell the pledged shares. All right, to rehypothecate the pledged shares. The paperwork does say that. And that they would be rehypothecating the short sales in an initial hedging period. All right, basically, what is the initial hedging period? Basically, it goes like this. When they enter into the forward agreement, they're not going to want to lose any money, so they're going to hedge the investment that they're making in AMC, the 50 million shares of AMC. All right, they're going to want to hedge that investment. So AMC says, well, you can rehypothecate or sell short these 50 million shares if you want to use them for a hedge. And when does the hedge start? When they enter into the agreement. When does the hedge period end? When the hedge is removed. All right? Not necessarily when the forward agreement is completed, but the initial hedge period is from the time the hedge is instituted to the time the hedge is removed. That is important to understand. So, we're all on the same page here, okay? Nothing has changed. We all agree that up to this point, that's how we can interpret this filing. Number 3 is correct as well. The hedging activity could decrease or suppress increase in the stock's price or keep the price from going up. All right? That's in the filing too, but this is where stock retail starts getting it wrong, and it gets totally screwed up by number 4 when it says that Goldman Sachs advised that on the same day it will sell hedging shares, it will also purchase shares from the open market to hold, which will also drive price back up. Note that Goldman Sachs is pre-selling shares from this offering and buying from the market. Where does he got that wrong? Well, let's start at the beginning. AMC and Goldman agreed to a 50 million share forward agreement, meaning that Goldman Sachs will buy 50 million shares of AMC in the future. All right? When they sign the agreement, these 50 million shares get locked up. They're earmarked. They're for Goldman. Now, for Goldman taking the risk of buying 50 million shares of AMC, they said they want to be able to rehypothecate or sell short a portion of the 50 million shares to offset the risk management in a hedging strategy. All right, meaning they're going to sell short a portion of the 50 million shares. So they think, their risk management team may think that they only need to sell 10 million shares in order to have an effective hedge own AMC's 50 million shares, so 10 million shares is good enough to short into the market. Now, here's where things get messed up. The minute they sell the shares short, the clock begins to tick on the T+1 settlement date, okay? Now, AMC's aware of that, and Goldman's aware of that. They know they got T+1 to get these shares, all right? Now, AMC cannot release the shares. Goldman hasn't paid a penny for them yet, okay? That is so important to understand this deal. At this moment, they have entered into a forward agreement. Goldman Sachs has agreed to buy the shares, but no money has traded hands. But CSI, Stock Retail, talked about a prepayment. We'll get to the prepayment in just a few moments. Relax. But at this moment, T+1 is ticking. What are they going to do? The paperwork says because they know that there's going to be a market price fluctuation because of their short hedging position, that they're going to buy an equal amount of the shares that they're selling short, all right, for the hedging, and they'll keep it in their account. Now, that sounds so honorable that Goldman Sachs is concerned that their hedging strategy is going to push the price of the stock down, so they're going to offset it by buying an equal amount to try to stabilize the stock's price. But remember, T+1 is ticking. What's happening? It's the next day. And where's your share that you just sold short? You ain't got it from AMC, and you saying you just bought the equal amount or thereby, and you're going to have to use those for the T1 settlement, or you're going to let the 10 million shares fly naked. And we all know that naked short selling is a myth and that it doesn't really exist, but they're going to use the shares that they're buying on the open market to cover the short position that they've opened to hedge with. That's the purpose. When they do that, they're not doing it to hold. They're doing it to deliver the shares to the people that they sold short to. And now we come to the problem, all right? Goldman Sachs entered into this forward agreement to buy 50 million shares. They didn't put up no money yet, all right? They just said that they would do it. They said they want to ensure their 50 million share investment by selling some of the shares short into the market. When they did that, they had to meet T+1, and they can't get the shares from AMC, so they had to go to the open market to buy the shares to cover whatever they went short in their hedging strategy. Now, think about this. What just happened? They just closed the hedging position. All right? First they opened a hedge position, then they bought 10 million shares to cover the hedged position, and then when they deliver the shares to the people at T1, they have then effectively closed their hedged position. Now this is important, people. This is where the con is at, and in just a moment I'm going to show you the money. But understand what you're looking at right here. All right? They went into a forward agreement for 50 million shares. They said they wanted to hedge their investment in that 50 million shares by selling some of the pledged shares. They do that. They sell 10 million shares into the market. They know that the sell pressure is going to push the price down. When the price falls due to the downward pressure from the hedging strategy, the next day they buy the shares on the open market at a cheaper price because they shorted 10 million shares naked into the market and pushed the price down. They're pushing the price down through their hedging strategy, and then they're buying the shares back the next day at a cheaper price at a premium profit for 1 day's work. This closes out their hedged position, though. All right, they no longer have a hedged position the initial hedge period is now over because the con is done. They simply wanted access to be able to sell naked shares of AMC, and this is how they did it. They sold the shares naked, they pushed the price down. The next day they bought the shares at a cheaper price and they closed out that short position. They made a couple of $1 million within a day. All right? And now that the initial hedge period is over, it's time for everybody to get paid for the crime, okay? That is how Goldman is raking in millions of dollars right now, selling naked shares of the pledged shares and then covering them the next day. That's how they're making money. Now, what about AMC? What about the fact that these yes-tards are going around telling everybody that on an equivalent that maybe they're going to get $4 a share, and if they do, AMC is going to get $200 million, and any dollar amount over $4, they would get an extra $50 million. So we could walk away from this deal with $400, $500 million. We're all going to be so freaking rich. No, that's not how it works. Let's go to the document and let's let AMC tell us how they got the prepayment, okay? Listen to this sentence. We will not receive any proceeds from the sale of any hedging shares by the forward counterparty. That is Goldman. If Goldman sells any of the pledged shares short, AMC says we will not receive any proceeds from that sale. But is a conjunction, and but means what I just said is irrelevant. You don't follow up, I love you, but, because it means whatever I just said, which is I love you, is irrelevant. Something is wrong. And just right here, they used the word but, and they said we're not going to receive any benefit from Goldman selling the shares short that they do not own. But we expect to receive a prepayment under each forward after the completion of the respective initial hedging period for the forward. Okay? AMC expects a prepayment after Goldman Sachs has closed out their initial hedging position. AMC says we need our cut. We need a prepayment for these 50 million shares. So how are they going to give AMC the prepayment? They just made millions of dollars shorting the company. So what's going on here? Very simple. Goldman Sachs wants these 50 million shares. They sell them into the open market naked. They go close out the short position when it goes down. They make a couple $1 million. Then they take the profits that they made from that short sale and they give it to AMC as a prepayment for the 50 million shares, meaning they're going to rinse and repeat this process over and over, and every time they close out an initial hedging period, they're going to give AMC a prepayment for the 50 million shares that they promised that they would buy. But how are they buying them? They're buying them by naked short selling the company and then buying it back at the cheaper price the next day, and then giving AMC the money for the shares of 50 million shares. Therefore, they're getting the 50 million shares free. They're not being charged a penny. The prepayment for the 50 million shares is connected to whenever they close out the naked short position and they make a profit, then Adam Aaron gets his cut. And I don't care what anybody says. That's exactly what's going on. This is how they're robbing us. They're fixing to give away 50 million shares for free, allowing Goldman to make the money to buy the 50 million shares through naked short selling. And this needs to stop. And with that, that's the explanation for the forward agreement between AMC and Goldman. And with that, love y'all. Be blessed. See you in the next video.